Welcome to this week's edition of Cattle Call. I'm Susan Littlefield on the Rural Radio Network as we do this program today from the American Coalition of Ethanol's annual conference that's taking place in Omaha, Nebraska. No surprise, we've got some good numbers in this cattle market, and we're going to thank the man you see on the screen. Brad Kooima is joining us. He's with Kooima and Varlick out of Sioux Center, Iowa. So why do I say that? Because let's rewind to last week's program and the program before. Brad had made the comment that we were going to see an uptick happening in this cash market. We just had to have patience. And Brad, patience a virtue. Look what we got, $4 higher.
Well, you're very kind.
You're welcome.
You. Yeah, well, usually bad news beats you home and good news nobody talks about, right?
Right.
It makes me think of what I said to you off air, that even a blind sow finds an ear of corn now and then. So, you get lucky once in a while. But those are kind words. But thank you. I think what we've talked about here for the last couple, 3 weeks, and really the last several, where I thought there was that the trade was not appreciating just how current the North was and how much leverage you have when you're current instead of when you're backed up. To be able to turn down a bid is a different deal than just having to, accept it. And let's back all the way up to, I had a friend of mine in Texas this morning. He said to me, it feels to me like we're current around here for the first time since the Holcomb fire. That was August of 2019. When you get backlogged, it is a challenge and it takes forever, it feels like, to get cleaned up. Conversely, when you're nice and current, you can skip a week if you don't like prices and you're still in really good shape. And I think the strength and the tightness of supply in the North, Susan, is what really dictated that strengthening cash for the last 2 weeks. And finally, the South woke up today. Last week, they traded at basically 136, and today they traded at 140, $4 higher, and kind of took away that whole worry about the premium that the August futures had. So, yeah, it's been a fun couple of days.
Do you have any delivery concerns out there, though, for this market?
I talked about that last week, maybe even the week before. Was worried, there has been an entity down there in the South that claims they can't get a bid and they deliver whether it looks like the basis dictates that it's a good business move. Now this time with the August Gala premium to the 136 trade, I guess we all kind of thought there might be some. Now there has been a few deliveries. There was 6 the first day. They were demanded. There was 10 the next day. And they were also demanded. In other words, the guy that was long said, yeah, bring him on. I'll take him. And that strategy right now looks pretty smart. That guy was taking delivery on basically $1.38 cattle, and futures are now at 140.60, and the cash market's 140. So it looks to me like we're finally getting cleaned up on that oversupply, that burdensome imbalance in supply, if you would, that the South had.
What are your thoughts? I mean, June numbers for exports were okay for cattle. I mean, we saw a little bit of a drop, but in the whole picture of the world, it's still nothing to complain about.
I don't think so, Susan. It's there's been a couple of demand little articles propping up from some of the commercials. But year to date, the exports, the way I look at the data this week, we're still 3% above a year ago. And I think that's pretty good. I think that domestic demand, it's August. You probably don't have that middle meat, ribeye, New York strip demand that you do earlier in the spring. It's a hamburger hot dog time of year. It always is. Now, having said that, I've heard about this, how, the boxes are going to break and you better be worried about that, blah, blah, blah. Well, box beef this morning is $263. The week of Mother's Day, which arguably is one of the highest seasonal times of the year, it was $258. Boxes are still $5 higher than they were in the springtime. I would have a long, hard argument with anybody who tells me that demand's a big problem here. I do not believe it is at all.
So the word of recession in the cattle market, are they going hand in hand, or is it kind of sheltered at this point?
We have to be businesslike and respect that there is another side to the news. And I think that's twofold. I think you brought up a good point with, the recession fear. And for me, I think I probably even would put on top of that worry about the China-Taiwan thing. Now, China this week has continued to do business as usual, which I hope, and I really, in my heart of hearts, I think that that's the way it will continue. But of course, if they decide that they are emboldened enough to try to take Taiwan back, which they've made no bones about, that's what they think they would like to do, to me, that would set off a trade problem big time with all of our ag stuff, not just the cattle, but grains and certainly, especially the hogs. So those are two things that we want to certainly be sensitive to. Now, it seems like the recession fear, if anybody's looked at the stock market lately, we've been straight up here for 3 weeks. You know, it doesn't seem like they're too worried over there. There are some signs that, you know, maybe this recession, which I think we're already in, we are seem to be seeing some of the inflation factors start to dip down, and the CPI this week, you know, was better than expected. That helped things. So maybe the recession edge or worry is just a little less than it had been here the last little while.
Well, Brad, as we wrap all of this up, it's been dry. It continues to be dry. What fear does that put in this cattle market moving into the fall months where we're used to pulling cows and calves off, and many of them have already happened?
And it's a regional problem. And, you know, you talk to someone in North Dakota, well, now somebody will call me from North Dakota, but generally the people I know in North Dakota are very, very happy with the moisture situation. Northern South Dakota, that northwest corner of South Dakota, which had been just beat up for a couple of years in a row, is in much, much better shape. Eastern Montana, the connections I have there would tell me the same thing. And in fact, I've got guys tell me there that the grass is as good as they can remember it. So, you know, those areas would probably fit into my idea that this is the year where we start to change the overall cattle cycle, where you start to build it back, that herd, retain heifers, don't send everyone to the feedlot, tighten up the supply then in the fourth quarter, first quarter of next year especially, and move on down the road. Now, that does not say anything about our southern friends. Now, there was a little bit of moisture through parts of Texas earlier in the week, but they need a whole lot more than one shower. Very severe, all the way up into areas of Nebraska, as you know. I think, to me, that southern thing, if they would start to get some moisture now in Texas and Kansas, enough to where they dare to plant wheat, get that wheat pasture started, I think they would dare to say, oh, let's take a shot at holding some of this stuff. I hope for their sake and, well, for the market's sake too, that that's what happens. But we've had unbelievable liquidation. The cow kill year to date is an all-time record, believe it or not. It's even bigger than it was in 2011 so far. I mean, up until August now. So it just, when you think it's safe to run out in the water, right? You know, there's always some other news that you got to worry about, but that's the markets.
Hey, let's look for some higher numbers come next week on the cash.
Higher cash,
I believe. 3, 4 more. Should we do it?
Let's do 2 to 3 higher, and I think we could be, well, no sense being stupid, but I think we can be. We talk a month from now. Let's talk about whether we've managed to put on 8 or 10 from here or something like that. How about that?
That works for me. Thanks, Brad, for joining us this week. I always want to remind folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been today's Cattle Call on the Rural Radio Network.